Hello guys, welcome back with another video. Today we will have a detailed look about the 5 different companies whose PE ratio is very low and who is a multi-bagger company, which means that the company has given more than 100% returns to its shareholders in the last 1 year. But before we start, at first we have to know why we are just looking for the low PE ratios company. So because the PE ratios actually full form means price to earning ratio, which means that you are buying that particular company shares at a very minimum price. This is the best way of knowing why PE ratio is important. So below 20, every company is good. So let's start the video with the first company in our look. So the first company in our video is Karnataka Bank Ltd. So the current price is around 132 rupees, whereas all-time high was around 168 rupees and the low was 57 rupees. In the last 1 year, the company has given more than 112% returns to its shareholders. So the bank was actually engaged in providing a wide range of banking and financial services involving retail, corporate banking and para-banking activities in addition to treasury and foreign exchange businesses. So this was the detail about Karnataka Bank Limited. So we will have a detail more look about this company. So the company has around 877 branches, 1448 ATMs and cash recyclers across 22 states and 2 union territories. The company also has a strong presence in South India, especially with 79% of branches located in South. Around 556 branches are located in only in the state of Karnataka. So this is amazing. And if you see the revenue split, so it is around from corporate and wholesale banking, it is around 35% as for financial year 2022. From retail banking it was 41%, from treasury it was 18%, and from other commercial operations it was around 6%. So now we will have a quick look about the fundamental key highlights of this company. So the market cap is around 4,000 crores, the PE is around 4.32, the ROC is around 5%, the book value is 228 rupees, and the ROE, which is return on equity, is around 7.41%. So this was the overall fundamental key highlights of the company. So now let's have a look on the pros and cons account of the company. So in pros, the stock is almost trading 1 time its book value. The stock has also provided a good dividend yield of 3%, and whereas in cons, the company has a low interest coverage ratio. The company also has a poor sales growth of almost around 7.3% in the last 5 years. The company has a low ROE, which is return on equity, of around 7.5% over the last 3 years, and the company also has a liability of around 12,143 crores. And there are many more stuff. You can just pause the video and have a look on the pros and cons account of the company. So now let's have a look on the second company in our list. So the second company is Mirza International Ltd. So the current price of the company is around 60 rupees, whereas all-time high was around 73 rupees and the low was 21 rupees. In the last 1 year, the company has given more than 120% returns to its shareholders, and the company has recently in some months has also done stock split, so the actual price of the shares was very high. So let's have a detailed look about this company. So the company was started in 1979, and the company is a manufacturer and exporter of finished leather footwear and trader of footwear and apparels and allied products. So this was the overall detail about the company. Now let's have a look on the more details about this company. So the company has around 200 plus exclusive brand outlets, 830 multi-brand outlets, and chain stores of 99 cities. So they have a multiple chain stores which is across 99 cities. The company is also present on e-commerce platform, and some of the business divisions include like Trinity division, which includes manufacturing finished leather from raw hides and many more things, from the shoe division, which is actually from manufacturing finished leather shoes, and garments, which includes trading of garments and accessories. And the company also have some famous brands including Red Tape and many more. You can just pause the video and have a look on the entire company's list. So this was the overall company's detail. So now let's have a look on the fundamental key highlights of the company. So the market cap is around 821 crores, the P is around 5.21, the ROC, which is return on capital employed, is 22%, the ROE, which is return on equity, is 15.8%, and the book value is almost 70 rupees. So now let's have a look on the pros and cons account of the company. So in pros, the company has reduced debt. The stock is almost trading 0.8 times its book value. The company is also expected to give good quarterly results. The promoter holdings has increases by 3.6% over the last quarter, and the company's working capital requirement have reduced to 123 days to almost 95.8 days. So there was a decrease in the overall working capital requirement of the company. So whereas in cons, the company is reportedly making profit but it's not paying out any dividends, and the company has a low ROE, which is return on equity, of 8.5% over the last 3 years, which we have already seen in the fundamental analysis. So this was the second company in our list. So the third company in our list is Lambodhara Textiles Ltd. So the current price is around 225 rupees, and the all-time high was around 240 rupees and the low was 66 rupees. In the last 1 year, the company has given more than 117% returns to its shareholders. So the company was incorporated in 1994, and the company actually manufactures lub yarns, multi-counted and multi-twist yarns. So this is actually the company involved in the production of yarns and different type of yarns. So now let's have a look on the more detail about this company. So the company has actually two manufacturing units in Tamil Nadu with a total of around 37,800 spindles with around 33,224 spindles which are providing fancy yarns. And you can just pause the video. This is actually the overall detail about the manufacturing facilities of the company. And the company also has installed 4.75 meter watt of wind energy capacity in financial year 2021 and had purchased 1 megawatt rooftop solar power generators of reed power plants which costing around 5 crores. So now let's have a look on the revenue splits of the company. So from textile, company is actually getting around 95%, whereas in financial year 2018 it was around 97%. From windmill it was around 4.5%, whereas it was around 2.1% in financial year 2018. From real estate it was around 0.5%, which was 0.9% in financial year 2018. So in geographical split, from domestic within India it was around 91% in financial year 2021, whereas it was 9% in financial year 2018. From export it was around 89% in financial year 2021, whereas in financial year 2018 it was around 11%. So this was the detail about this company. So now let's have a look on the fundamental key highlights of the company. So the market cap is around 234 crores. The stock P is almost around 11.4. The ROC, which is return on capital employed, is 18.4%. The book value is 97.3% rupees, and ROE, which is return on equity, is around 18.8%. So this was the overall fundamental key highlights of the company. So now let's have a look on the pros and cons. So in pros, the company has expected to give a good quarterly results, whereas in cons, the company has delivered a poor sales growth of almost around 6.2% over the last 5 years. The company might be capitalized the interest cost, and the promoters has placed almost 40% of its holding. So now let's have a look on the fourth company in our list. So the fourth company is Geekay Wires Ltd. So the current price is around 172 rupees, whereas all-time high was around 188 rupees and the low was 54 rupees. In the last 1 year, the company has given almost 151% returns to its shareholders. So the company is actually engaged in the manufacturing of niche quality steel wires and nails which find applications in power transmissions, cable and conductors, general engineering, construction, etc. So these are the general requirement was the company actually manufactures. So now let's have a look on the more detail about this company. So the company has taken over the Kandoi family in 2012. So this was the information about the change of the promoters in the recent year, and the status of the company was changed to public limited company, and the name of the company was changed to Geekay Wires Limited in January 13, 2015. So the company's product includes Geekay Wires, which has been in the business of manufacturing high quality steel wires and wires product. So the company is actually engaged overall in the manufacturing of wire and spring steel wire. So now let's have a look on the fundamental key highlights of the company. So the market cap is around 180 crores. The stock P is almost around 10. The ROC is around 14%. The book value is 58 rupees and the ROE is around 18.8%. So now let's have a look on the pros and cons of the company. So in pros, the company is expected to give a good quarterly results. The company also has a good profit growth of almost around 17% CAGR over the last 5 years, and the company has maintained a healthy dividend payout of 32.4%, and the company's medium sales growth is 32.3% in the last 10 years. Whereas in cons, the stock is almost trading 3 times its book value. So the last company in our list is SKM Egg Products Export Limited. So the current price is around 143 rupees, whereas all-time high was around 222 rupees and the low was 51 rupees. In the last 1 year, the company has given almost more than 118% returns to its shareholders. So the company is engaged in the manufacturing and sales of egg powder and liquid egg with varieties of blends used in various segments of the food industry and in the healthcare sector. So let's have more details about this company. So in the product portfolio of the company manufactures egg powders in different areas like whole egg powder, egg yogurts and many more powders. The bakery mix, which actually engage in the manufacturing and helping in the form of cakes and everything. Liquid eggs, which is actually like whole egg liquid, egg yolk liquid and many more. So this is the overall product portfolio of the company. Whereas in geographical split, from India the company gets around 30% of revenue in 2022. From Russia it was around 9%. From Japan it was 17%, from Europe it was 4.5% in financial 2022, and from the rest of the world it was around 25.8%, which if you compare with 2021 it was around 20.9% in the rest of the world. So the second one is the revenue mix. So the egg powder and egg liquid contributes about 72% of its revenue. From eggs and poultry feed it was around 27% into financial year 2021, and other was around 1%. So this was the detail about this company. So now let's have a look on the fundamental key highlights of the company. So The market cap is around 380 crores. The stock P is almost around 8.15. The ROC is around 7.27. The ROE is around 5.87%. And the book value is 52.3 rupees. So now let's have a look on the pros and cons account of the company. So in pros, the company has expected to give a good quarterly results, and the company also maintained the healthy dividend payout of 20.06%. Whereas in cons, stock is trading around 2.76 times its book value. The company has delivered a poor sales growth of 5.43% over the last 5 years. The company has a low ROE of around 8.65% over the last 3 years, and the company might be capitalized the interest cost. So this was the overall 5 companies on our list. So we have some extra companies as well. You can just pause the video, and this is the overall summary about this company. So the multi-bagger stocks which are having low PE ratios are over here. So thank you so much for watching our video, and just to remind you, this is not a buy or sell recommendation video. Do your own analysis before investing. Thank you so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. Bye bye.